Hello everyone, today we will learn about Chapter 5, Introduction to Accounting from Islamic Perspective. We are Komer and our group member is Lokman, Saiban, Muhammad Alif, Murshid and Azri. In this chapter, we will learn about accounting from Islamic perspective, definition of Bai Bitaman Ajil, Al-Ijarah, Hibah, Mudarabah, Murabahah, concept of accounting from Islamic perspective, comparison Baitul Mal, Wakaf and Zakat, Zakat rate, Zakat base and measurement for Zakat. Accounting from Islamic perspective is the process of identifying, measuring, and communicating economic and other relevant information inspired by Islamic worldview and complied with Sharia Islamiyah to permit informed judgment and decision by potential and expected users' information to enhance social welfare. By Vitamin Ajil, a deferred payment basis at a price which includes a profit margin agreed by both parties and payment is made in monthly installment. It refers to the concept of hire purchase in Islamic financial instrument which is allowed under Sharia. It seems to be similar to the hire purchase contract under conventional financial instrument. Al-Ijarah. It refers to the sale of a definite usufruct of any asset in exchange for a definite reward. It refers to a contract of land lease at a fixed rent payable in cash and also to a mode of financing adopted by Islamic banks. Ijarah wal Iktina means a mode of financing by way of hire purchase adopted by Islamic banks. Hibah. Hibah is a gift. This refers to a payment made willingly in return for a benefit received. For example, in savings operated under Wadiah, banks will normally pay their Wadiah depositors hibah, although the account holders only intend to put their saving in the banks for safekeeping. Next is Muharabah. Muharabah is a form of partnership where one party provides the funds while the other provides expertise and management. Mudarabah is not loan to the entrepreneur, but it is capital for whether in a partnership venture. Murabahah. Literally, this means a sale on mutually agreed profit. It is a contract of sale in which the seller declares his cost and profit. Murabaha has been adopted by Islamic bank as a mode of financing. As a financing technique, it can involve a request by the client to the bank to purchase a certain item for him. The bank does that for a derived profit over the cost which it stipulates in advance. Now, we go to the concept of accounting from Islamic perspective. The concept of accounting from Islamic perspective has three, that is Baitul Mal, Wakaf and Zakat. The first one is Baitul Mal. Baitul Mal is treasury in general definition as property, house or store treasury which manage all financial resource and Islamic community property. Primary responsibility is to manage that own assets and finance that own and entrust to each state Islamic religious council such as Zakat and Wakaf. The second one is Wakaf. Wakaf is an inalienable religious donation in Islamic law. typically donating a building or plot of land for Muslim religious or charitable purpose. The donated assets are held by a charitable trust. The last one is zakat, that which purifies one of the five pillars of Islam, is the giving of a fixed portion of one's will to charity, generally to the poor and needy. The comparison of Baitul Mal, Wakaf, and Zakat is Baitul Mal is manage all financial resource and Islamic community property. Difference with Zakat and Wakaf. Zakat is donating a sum of money for that who needy, and for Wakaf is not donating buildings or a lot of land to community. Zakat rate. The minimum threshold that is nisab of zakat on savings or investments is 85 grams of gold or worth. The rate of zakat is 2.5%. As for livestock, both the minimum threshold and the rate depends on the type and the number of animals. Zakat base. The net adjusted amount of zakat assets and liabilities used for or derived from business activities. An entity is advised to refer to the relevant zakat authorities for further. An entity may apply one of the following method by Jakim 2011. There is adjusted working capital method, there is net asset method, and adjusted growth method, net invested fund method. Now we go to measurement of asset and liability for zakat. The first one is Urfiyah method, that is capital growth. Current capital equal owner's equity plus debt financial capital plus profit minus fixed assets minus others non-current assets. The second one is Sharia method, that is working capital. Net current asset equal to current asset that is full ownership minus current operating liability only.